Insights from the S&P 500's record high frequency. Year to date, the S&P 500 index has advanced about 16.5%, a gain that may not seem particularly remarkable at first glance. However, this moderate increase largely reflects the brief but sharp correction earlier this year following tariff-related headlines. If measured from the April 8th closing low, the index has actually climbed by about 37%, far outpacing the Hang Seng Index over the same period. So far this year, the S&P 500 has recorded 36 all-time highs. Combined with 57 new highs in 2024, the total of 93 record highs in less than 2 years marks the fifth highest frequency since World War II, behind only 1965 with 102, 1996 with 116, 2014 with 98, and 2021 with 103. There are two key observations that stand out from this pattern. One, seasonal tendencies. Historically, November and December have been the strongest months for the S&P 500. Since 1945, the index has posted average monthly gains of 1.6% and 1.5%, the best two-month stretch of the year, with winning probabilities of 67.5% and 75%. From a seasonal perspective, this suggests that the index may continue setting fresh highs toward year-end, with the cumulative two-year total likely to exceed 100 record highs. Two implications of frequent record highs. The more frequently and persistently an index reaches new highs, the more technically extended it becomes, increasing the likelihood of a subsequent correction. Historical data supports this pattern. After the record-heavy years of 1965, 1996, 2014, and 2021, the S&P 500's performance in the following year generally weakened. Except for 1996, the index either remained flat, down 0.7% in 2015, or experienced double-digit declines, down 13.1% in 1966 and 19.4% in 2022. Outlook. Seasonal strength suggests that the S&P 500 may still have further room to rise and could reach new highs before the end of this year. However, given the extended rally over the past 2 years and the emerging bearish divergence in market breadth, the risk of a post-climax correction in 2026 appears to be increasing. As the saying goes, history does not repeat itself, but it often rhymes. If the index manages to climb to new peaks by year-end, short-term momentum could remain intact. Yet as valuations and sentiment approach elevated levels, investors may start to consider whether 2026 could become another year of adjustment following an exuberant peak.
Thanks for watching. That's all for today's update. Don't forget to like, subscribe, and hit the notification bell for more in-depth market analysis. See you next time.